Hello traders, you welcome back to the Forex Geek channel. And in this particular video, we're just going to be quickly unlocking the power of Trendline Mastery. Specifically, we're going to be looking at how to identify momentum change with clarity and precision. Momentum shifts are the heartbeat of market structure, and spotting them early can make all the difference in your trading decisions. You might be wondering why trend lines matter. Maybe you're one of those traders that have had a lot of things about trend lines here and there, but you don't exactly know why it matters. Trend lines are one of the simplest yet most powerful tools in trading. As easy as they look, as simple as they look, as whatever word you want to use, as they look, they are effective. Okay, they help you visualize the market slope and speed. All right, in other words, it's momentum. And a strong trend line shows you that buyers or sellers are in control, right? And the trend lines can also tell you when there is a shift in momentum. It can tell you when buyers have taken over from sellers. It can tell you when sellers have taken over from buyers. All right, in this particular context, you can see that the buyers were in control as price kept on being rejected from this trend line over and over and over again, okay, until when sellers finally prevailed. In this particular context, we had a steep slope and buyers were in control until when the sellers finally took over. And as you can see, that as the sellers took over, the bearish trend line was continually respected over and over again until the buyers took over again. Okay, so instead of guessing when the market will turn, trend lines give you a clear visual cue to stay on the right side of the market. When that trend line weakens or breaks, it's often the first clue that momentum is shifting. Now, in an uptrend, you have to connect at least two significant swing lows using the wicks for precision. All right. In a downtrend, you have to connect, two significant swing highs. Okay. The more times price touches and respects your trend line, the stronger that line becomes. Meanwhile, do not force the trend line. Okay. It should match the natural flow of price, not cut through random candles. Okay, when you want to connect, when you want to draw your trend line, you just have to look for the first two significant highs for a downward trend and just draw it. If price is going to respect that trend line, you're going to see it, right? You can see as I connected these two highs, you can see price respected it here, respected it here. Here we had a false breakout initially, but eventually respected it, and then here it respected it for a little bit before we had a breakout. Okay, so in this case, you can see after connecting these two lows, price respected it here. There was a false breakout initially, but you can see that it was obviously a false breakout, probably just a liquidity sweep. And then we had a continuation, and then price respected it here again, and here again, and here again, before we had another false breakout, and of course here before price continued in the direction of the trend. So you don't have to force the trend lines, just connect the natural flows, right? The first two candles are your reference points. Okay, the first two swing lows, I mean, for a buy, and the first two swing highs for a sell. Momentum changes often start subtly. You might notice price failing to reach previous highs, maybe in an uptrend, and or maybe failing to push to new lows in a downtrend. The slope of the trend line might flatten. Price may start crossing the line more often, showing a battle between buyers and sellers. So when you see this sign, just pay attention because the market could be preparing for a shift. Now, a true momentum shift usually involves a clean break off the trend line, followed by a retest. Okay, when you have a change in momentum, usually the trend line is going to get broken and there's going to be a retest, like what we can see happening here, right? After this bullish trend line was broken, you can see there was a retest before the bearish trend started. Okay, so that is how it usually happens, a lot of times. Okay, combining this with another simple confirmation such as a candlestick reversal pattern, or maybe a key support or resistance level, or increased volume can actually boost your accuracy. Now, one common mistake that traders make is reacting to every small break of a trend line, like what we can see happen here. That is the reason why you must have confirmation. When you want to trade breakouts, make sure you get your confirmations right, okay, before you jump into the trade. Because there are a lot of times when you're going to have a false breakout, like what we can see happening here. There was a false breakout here, another false breakout here, here again, right? It does not necessarily mean that when a candle closes below a trend line, automatically the trend has changed. No. There are times when, you know, the smart money would want to sweep out liquidity, right? They want to, hit some retail traders stop losses and then, get liquidity and continue, the ride to the upside, or, if there's a bearish trend, continue the ride to the downside. So in order to avoid such kind of situations, you have to wait for confirmations. When a breakout happens, get a confirmation in, in the form of a retest. Okay, when a breakout happens, usually there is a retest and a continuation. So when a breakout happens, wait for a retest and a continuation before you enter in the direction of the breakout. But if you do not have a retest and continuation, it might just be a false breakout. Okay, but if the momentum is too strong, sometimes there might not be a retest. Okay, for example, if this momentum was really strong, perhaps this candle might have closed somewhere here, and then maybe, just maybe, we might have a slight pullback and a continuation. But that is when the momentum is really strong, okay? But in a case whereby the candle does not close far away from the trend line, then just know that it is necessary to get a confirmation, because it might be a false breakout. Now, another mistake is forcing trend lines onto messy sideways markets. When you have a sideways market, it is a sideways market. Do not try to force a trend line when you have a ranging market. Okay, trend lines do not function in a ranging market. Okay, you might just end up messing yourself up, taking bad trades and all of that, because ranging markets remain ranging markets. You ought to treat them as ranging markets and not as trending markets. All right, so do not make that mistake. Trend lines work best in trending conditions. So if the market is choppy, if the market is going sideways, just step back and wait for clearer price action. So by mastering trend lines, you are not just drawing lines on the chart, you are learning to read the market's momentum and anticipate changes before most traders see them. Okay, use them correctly, combine them with simple confirmations, and you will trade with more confidence and clarity. All right, so if this guide helps you sharpen your skills, click the like button and subscribe for more price action strategies. And don't forget to turn on the notifications so you do not miss out on what we have for you next. Okay, in the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.